All right, let's talk about one of the most headache-inducing problems in the digital asset space, the ruined weekend. Welcome to this explainer. I'm putting on my risk management expert hat today because if you manage a portfolio, you already know the golden rule. Crypto never sleeps. But for years, the traditional tools we relied on to protect our capital, well, they absolutely did. Today, we're unpacking a massive update from the CME Group that brings continuous market exposure into a totally new era. Here is our roadmap for today. First, we'll look at the 24/7 crypto reality. Then, how CME is going round the clock, followed by managing weekend market risks. Next, we'll cover hedging Bitcoin and Ether and wrap it all up with continuous risk management. Let's get right into it.
Section 1. The 24/7 crypto reality, market versus derivatives.
Think about this absolute structural nightmare for a second. On one hand, you have continuous cryptocurrency spot markets running non-stop 365 days a year. On the other hand, traditional derivatives, your futures and options, locked up tight for weekends and holidays. Holding spot assets that trade continuously while your derivative hedges are just asleep? It's a terrifying vulnerability for risk managers. It creates an incredible amount of friction when you're just trying to maintain a delta-neutral portfolio.
And that brings us directly to the danger of the weekend gap. Picture this, it's Friday evening. Traditional markets ring the closing bell, and boom, for the next 48 hours, you are flying completely blind. If a major macro news event breaks on Saturday morning and your spot assets take a nosedive, your traditional hedges are frozen. You are literally locked out, forced to just sit there and watch the volatility unfold without any ability to execute a defense. Not exactly a relaxing weekend.
Moving on to Section 2. CME goes around the clock. 24/7 CME Globex.
$3 trillion. Let that sink in. According to the source data, the CME Group's crypto products saw nearly $3 trillion in notional trading volume in 2025. This isn't just some niche experimental market anymore. That immense volume screams undeniable, heavy-hitting institutional demand for regulated digital asset exposure. And when you have $3 trillion moving through these contracts, the infrastructure simply has to evolve to protect that capital around the clock. So, to meet that massive institutional demand, CME stepped up. They announced their suite of crypto futures and options is now accessible 24/7 via the CME Globex platform. We're talking extended access for the heavyweights, Bitcoin, Ether, XRP, and Solana. This is a monumental shift, guys. It perfectly aligns traditional financial derivatives with the always-on nature of the crypto spot market. You finally have regulated exposure available exactly when you need it.
Section 3. Managing Weekend Risks, Volatility Hedger.
Here is the crucial point we have to internalize. Macroeconomic catalysts and geopolitical events, they really do not care if you're trying to enjoy a Sunday barbecue. Historically, crypto has witnessed brutal price fluctuations outside of traditional market hours. When a shock event hits on a Saturday afternoon, crypto reacts instantly. Previously, your hedges were on ice, leaving you entirely 100% exposed to this weekend market risk.
But this extension of trading hours changes the game entirely. Continuous access gives you the flexibility to actually hedge positions during these periods of heightened volatility. Instead of just crossing your fingers and praying the market stabilizes by Monday morning, you now have the tools to actively adjust your hedges in real time. Make no mistake, this is the new cornerstone of modern digital asset risk management.
Section 4. Hedging Bitcoin and Ether, Continuous Exposure.
Let's dive into a quick 3-step masterclass on how to instantly neutralize weekend volatility using this setup. Step 1. Identify your weekend spot exposure. Let's say you hold a massive spot position in Ether, and out of nowhere, a Saturday shock sends the market downward. Step 2. Do not wait. You immediately log into CME Globex for 24/7 access to either futures or options. You can instantly short a futures contract or buy a put. And Step 3. Manage it fast. You've locked in your protection and neutralized the volatility right as it's happening. Basically, the days of biting your nails until the Monday morning bell, they are completely over. This eliminates that highly dangerous time gap between a global event happening and your actual ability to execute a hedge. You are no longer a passive observer of weekend volatility, you're an active participant. You have the power to defend your Bitcoin and Ether portfolios the very second a market-moving event takes place.
Finally, Section 5. Continuous Risk Management, the 24/7 Discipline.
This quote from the source material hits the nail on the head. It confirms our new reality, stating that traders can now, quote, effectively manage their exposure to Bitcoin, Ether, XRP, and Solana throughout the week. Listen, risk management is no longer a part-time job constrained by legacy banking hours. It is a 24/7 discipline. If your assets are moving 24 hours a day, your risk management absolutely must operate 24 hours a day. The tools are officially here to do exactly that.
So, as we wrap up this explainer, I really want to challenge you to audit your own protocols. Seriously, ask yourself, are you still leaving your portfolio exposed to the weekend gap? How secure are your assets, truly, when traditional Friday trading hours end? With CME Globex now offering 24/7 access to crypto derivatives, the old excuse of inaccessible markets is gone. It is time to step up and ensure your risk management strategy is as relentless and continuous as the crypto markets themselves. Thanks for joining me.